Hey everyone, welcome back to Corporate Decoder, the place where we make sense of how companies really work. And today we're diving into a filing that could mean more cash for MEDICINOVA. But at what cost? Grab your popcorn, because this one has some interesting terms. Before we dive in, if you want to unlock the secrets hidden in corporate filings, hit that subscribe button and join our Discord community linked in the description below. We break down these documents so you don't have to. Alright, so what we have here is a Form 8K filing from MEDICINOVA Inc. Think of an 8K as a special report a company has to file when something big and important happens, something that shareholders need to know about right away. This filing is all about the company making a deal to get more money. The big news is that on July 30, 2025, MEDICINOVA entered into something called a Standby Equity Purchase Agreement, or CPA, with a company called YA2PN Ltd. Now, this sounds complicated, but what it really means is MEDICINOVA has a way to sell its own stock to YA2PN Ltd to get cash. So how does this work? MEDICINOVA can choose to sell its stock to YA2PN Ltd any Teamtain Ltd anytime over the next 36 months up to a total of $30 million. This isn't a situation where they have to sell a set amount at a set time. Instead, MEDICINOVA has the power, the option to decide when and if they want to sell shares to raise money. This is important because it gives them flexibility. And what stock are they selling? It's MEDICINOVA's common stock, the very same stock that people trade on the stock market. Now for the kicker. How much will they get for this stock? MEDICINOVA can choose to sell it at a price that's 97% of the lowest average price over 3 days. Let's break that down. They have to pick a 3-day period and then look at the average price each day weighted by how much was traded that day. The lowest of those three averages then gets multiplied by 97%. This means MEDICINOVA is agreeing to sell its shares for a little bit less than what the market might be paying. This discount is often a way to incentivize the buyer to agree to purchase the stock. So this agreement allows them to raise up to $30 million. This is essentially a safety net, a way for the company to get cash if they need it for their operations or projects without having to go through the sometimes lengthy process of issuing new stock to the public. Now let's talk about the cost for MEDICINOVA to have this agreement in place. They agreed to pay YA2PN Ltd a $25,000 structuring fee and another $375,000 as a commitment fee. Basically, they are paying for the promise that this money is available to them. There's a really important limit here though. MEDICINOVA can't issue more than about 9.8 million shares under this agreement. This is a cap set at 19.99% of the stock already out there. They need special permission from their shareholders or a higher average selling price to sell more than this limit. This is often done to prevent their existing shareholders from having their ownership diluted too much without their approval. And get this, YA2PN Ltd also has a limit. They can't buy so much stock that they end up owning more than 4.99% of MEDICINOVA's voting power. This is a common rule to avoid triggering certain reporting requirements or obligations that would come into play if they became a major shareholder. This deal isn't a done deal instantly. YA2PN Ltd's obligation to buy shares depends on MEDICINOVA filing a registration statement with the Securities and Exchange Commission. Think of this registration statement as a formal declaration that the shares being sold are properly registered and can be offered to investors legally. Until the SEC declares that statement effective, YA2PN Ltd isn't required to buy any stock. Now, this whole agreement, the Standby Equity Purchase Agreement, is attached as Exhibit 10.1 to this filing. We can look at the finer details there, but the main takeaway is that MEDICINOVA now has a flexible option to raise $30 million by selling its stock at a slight discount to a specific investor. And the filing is signed off by their President and Chief Executive Officer, Yuichi Iwaki, indicating this is an official move by the company management. So my take on this MEDICINOVA is securing a funding lifeline in the world of biotech and pharma, especially for companies that are still developing their products. Securing funding is absolutely crucial. Having this $30 million facility available gives them a lot of strategic breathing room. They can use it to fund research, development, clinical trials, or general operations without the pressure of immediate public offerings. The discount, of course, is a trade-off, a cost of having this capital ready. It's a balancing act. They are essentially hedging against needing to raise money in a less favorable market later on. The key for MEDICINOVA will be how they deploy this capital and whether it leads to significant progress in their drug development pipeline. The 19.99% share limit is a standard way to manage shareholder expectations and prevent hostile takeovers without proper shareholder consent. It's a sign of good corporate governance that they are respecting these potential ownership thresholds. The 4.99% limit for the buyer is also quite normal to avoid triggering more stringent reporting and regulatory oversight. Overall, this SPA shows that MEDICINOVA is being proactive about its financial future. It provides a crucial source of funding that can be tapped as needed. The real test will be whether this funding translates into tangible achievements and positive outcomes for the company and its shareholders. It's a tool for flexibility and survival in a high-stakes industry. Alright, that's our breakdown of this MEDICINOVA filing. What's your take on these funding arrangements and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.